Thank you, Shidem, for the kind introduction. I wanna say two notes of thank you. One to the World Bank and the colleagues in Washington for this invitation to share thoughts in our recent experience with the issuance of a 30-year bond through domestic syndication. We pretty much look forward to exchange views with the staff, with fellow debt managers in emerging markets, and we will be very happy. And I hope that we just ran out of time in terms of participation. So please, I encourage you all to ask questions, make comments and recommendations for this. The second thank you goes also to the World Bank and its flagship program, the Government Debt and Risk Management Initiative, also known by its acronym GDRM. We have taken an approach in Colombia through different administrations, through different debt managers, in identifying the GDRM as a partner. And in fact, it has been always a very strong partner in building and contributing with technical assistance, best practices, exchange of experiences, and it has been very useful. And the latest 30-year bond is only a recent example of many others that we have developed together through time. So thank you to them, thank you to the other colleagues for that collaboration. And with that, let's get into a presentation that I prepared for you. And really is written from the perspective of a debt management office. So let's get to it. So what was the goal of issuing a 30-year bond during one of the most difficult times for debt managers? And we had five goals in mind when we launched this initiative. The first one, and it's not written here, but it was very clear. And when we started the year, we had financing needs adding up deficit and amortizations of around 7% of GDP. And by the end of the first quarter, those financing needs doubled to 15% of GDP. So we decided to embark in a very strong process of diversification of our funding sources, but we needed a new instrument that allowed us to crowd in a bigger size of capital and to be able to timely be able to access that new instrument. So that was the first goal that we had in mind when we approached this. And the other ones are more classic. Of course, we were in a discussion with the chief of the World Bank, chief economist, Dr. Reinhardt, and she said two things that really resonated in my mind as a debt manager. The first one is that be ready and be very tactical to take advantage of market windows. And the second one, she said, don't be tempted for the apparent low cost of short-term financing. So she said, it's easier said than done, but as much as you can issue at longer tenors, even during a time of turbulence, try to issue on the long end of the curve. So that's what we have summarized here as reducing rollover risk. And while many countries were actually relying on Treasury bills, we wanted to be able to issue at the longest tenors possible. The second strong objective that we had is that we not only needed the money to contribute to the financing program, but we really wanted to continue deepening and developing our local domestic market. And the issuance of the complementing of our yield curve was crucial because we were in a situation in which we have a yield curve from 0 to 30 years in hard currency, in dollars. We even had a yield curve in inflation linkers from 0 to 30 years, but we had this problem that we had only a yield curve from 0 to 15 years in fixed rate local currency financing. So we decided to give that jump from 15 to 30 years. And this is essential because we were basically offering a reference, a benchmark for the further development of other markets that target those tenors. For example, pension funds, infrastructure projects, mortgages, annuities, insurance, and we wanted to provide that benchmarking and that greater liquidity for pricing discovery in our yield curve. And the last objective that we had is to really diversify our investor base. We realized that in this context of the pandemic, when the financing needs were being so large, we really needed to crowd it in capital into Colombia. And we realized that, yes, our domestic market was the building block of this demand, but we needed to attract capital from different places of the world. And this is something that we can talk later in the Q&A, but Colombia has been relatively successful in not only internationalizing its local currency capital markets, but also diversifying that group of international investors, which is also a recommendation that we received and that we apply. And it's good to be internationalized, but it's not so good to be so dependent on a few number of players in the investment market. So those were the objectives, be able to accommodate our financing program to higher financing needs, not be tempted to finance too much at the short end of the curve, further develop the capital markets and broadening our investor base of local currency financing. A couple of notes on the Colombian market. We have a market that is practically 95% funded through Dutch auctions that we conduct every week, and we sort of alternate between fixed rate instruments and an inflation linkers instrument in these auctions. And we also have an ability to do like private placements, mostly with the public sector entities that we use more often in the past, but that more and more we're just going almost to 100% Dutch auction mechanism for our local currency bonds. So the idea was to have a third line in this chart that you're seeing on the right-hand side. So we will have the private placements with a smaller and smaller participation, the Dutch auctions, and now we have the syndications. But there was a couple of changes that we had in mind when we conducted this exercise. The first one is that we had a challenge of liquidity. We reviewed different experiences in other emerging markets, and the lessons learned is that, yeah, you can do a syndication, but you have to have a plan to continue providing liquidity to this instrument so that it's more attractive for institutional investors and for foreigners. In a traditional auction, the maximum that we can collect every week is something around $260 million. And as Chidem was saying, and we will see it in the next slides, we were able to raise $1.2, $1.3 billion equivalent. So that was a key challenge that we wanted to address from the beginning, is to guarantee that the launch of this instrument was going to be liquid, tradable, and attractive for different investor bases. The second one is that at the end of the day, we had the challenge of discovering a price that was not there. As I mentioned, the furthest point in our local currency yield curve was 15 years, and we needed to give this jump from 15 to 30 and discover that price. And we realized that probably the Dutch auction was not the ideal mechanism to that, and that we wanted that price to be determined by the forces of supply and demand in the capital market. We also wanted to, we had two different options. We had the option of hiring any book runners, but we made a deliberate decision to strengthen our primary dealers scheme. And we decided to take the book runners for this operation within the scheme of the primary dealers. And finally, we had a challenge to standardize our settlement practices with the international settlement practices. For example, in Colombia, fixed income instrument settles T+0, whereas, as you know, internationally, fixed income instruments settle between T+2, and even in hard currency primary markets, T+5. FX markets settle T+3, T+2. So we needed to make some reforms and some adjustments in our domestic infrastructure to be able to provide a smooth process for, especially for international investors. So we are not alone in this, and to be quite frank, we got inspired by our friends in the OECD. Colombia, starting this year, early this year, is a full member of the OECD. And we noticed how most of the countries in continental and in the northern part of Europe started to be very common uses of syndications, and probably with the same goals that we had. So this table that was kindly prepared by our friends at the World Bank shows that in the main OECD countries, the percentage of issuance through syndication during 2020, and this goes, I think, until the third quarter, has reached a record 25%. So for every $100 that these OECD countries raise, approximately 25 has been through syndications. And we see names that we were not expecting at the beginning, like Germany, like France, and more assiduous users of this instrument like Portugal, Cyprus, Finland. Just to put into context, this number that today is 24%, last year in 2019, the same table will give you a number of 11%. And when you see here in the details, you see how this syndication also facilitates the issuance in the long term of the curve, which is quite important. So this is a good practice that we observe in the OECD, and that we wanted to sort of integrate also to our toolkit in Colombia. So what is the step-by-step of the operation? The first one, we have 13 banks in our primary dealer scheme. Our primary dealer scheme has been established for a couple of decades. And we decided that is an important decision. We have, thankfully, different profiles of banks. We have the largest banks locally. We also have regional banks. We have brokers, and we have large international banks that participate as primary dealers. So the first criteria that we use is bigger is better, to put it simply. And we decided to give the mandate to the 3 top banks of the ranking of primary dealers in Colombia. Because we wanted to take advantage of the network of clients and their outreach nationally and internationally. And this was key. But we also wanted to have diversity in this book runner selection. So Bancolombia, which is the first bank that you see there, is the largest bank in Colombia. It's a local bank. It has a strong balance sheet, both in dollars and in pesos. And we're going to talk about this later on. Then we have BBVA, which is a European Spanish bank, because this type of instrument, as you saw in the previous slide, is very commonly used in Europe, and we have actually for Colombia the largest group of foreign holders of local currency bonds is continental Europe and Northern Europe. And third, we also pick Citibank in the sense that, as you know, they have a very large footprint globally and specifically in the United States, where we also wanted to target. So we wanted to have a diverse and very strong group, and that's a decision that counts. Nothing to say about the other primary dealers. What we also wanted to generate is to create the incentives for competition. We have a scoring system to determine this ranking in terms of liquidity, in terms of trading, in terms of how much they take in the primary market. And we started to see this tension. So number 4, number 5, number 6 are starting to run the extra mile, let's put it this way, because they want to also be considering future exercises for this, and we will be very dynamic. The second one is the pricing, how to discover the price of a security that is so far away from the latest point in the curve. So we tried different methodologies. All of them are imperfect, but they provide us some guidance on what should be the level of give me one second, the level of pricing that we were targeting. So if you just do the simplest math, which is to extrapolate to the very common model of Nelson and Siegel, we were seeing that going from the 0.15 years in the curve, that was around 6.2, 6.3%, to the 30-year will give you something like 7.2%. Again, more important than the decimal point here is you want to determine an area where you want to be launching and landing your transaction. Second type of models that we saw was to take a look at peers, at sovereign curves in local currency for peer countries. And we assess the cases of Chile, the cases of Peru, the cases of Mexico, Indonesia, India, and so far and so on. And with that math, the elongation spread between 15 years and 30 years will give us a number, again, starting from 6.2, 6.3 to a landing point of 7%. Then another advantage that we have in Colombia is that we actually had developed before an inflation linker curve to the 30-year. So a common method that us, an investor, use to discover the price was to go from the real rate to the nominal rate, and that takes you, and all these numbers are with the date of early October early September when we launched the transaction. And finally, we also had a way to go from our hard currency yield curve of bonds through local currency, through the basis, and so far. And there, the math will take you also somewhere above 7%. So when we did all these models, we got a range. We got a range that told us that our new bond will be somewhere between 7% and 7.25% in issuance date. And that was very useful. And you have to be very diligent in tracking these numbers, in doing consultations with the market, because as I mean, the purpose of this is not prescriptive, is more to give you guidance about those levers. So we had a starting point of 6.3 in the 15-year sector. That gives you sort of a spread of 90 plus basis points for an extension of 16 years. And that's sort of an extension cost per year of of 5 to 6 basis points. So that was important. In terms of timing, here, this is our 10-year local yield interest rate in the local currency bond. You see here that from the beginning to the end, the process took us like a year. And it took us more than we expected, basically because of the volatility of the pandemic. But that didn't distract us from our objective. So here in number one is when we had the World Bank mission and we started the technical discussions, not only with the World Bank, but also with the market, nationally and internationally. And we also wanted to take advantage of that positive backdrop in rates created by the start of the Fed easing policy. So we started this process back there in September 2019. Then we went into a process of preparation, very good markets, but then the pandemic hit. The pandemic hit, and we had a process that we decided to take advantage just to prepare, for example, all that had to do with legal contracts, with the mandates of the banks. So we even mandated the banks during the tough time of the pandemic because we wanted to be ready once the pandemic abated to be able to conduct this exercise. Then we also monitored the market and we got the push from the easing process that started in our local central bank. We had distortions in the auctions, not because we didn't like the prices or the interest rates, but virtually because the primary dealers had to adapt their trading platforms from trading at the desk to trading at home. So we suspended for 2 weeks auctions in March, but we resumed in early April. And from there, what we saw is this process of normalization. And once we hit sort of the sweet spot that we wanted, and here we had this target in mind that when the interest rate hit 5% in the 10-year sector, we wanted to conduct this operation. And that was the reason why in September, virtually 1 year from the starting point of this process, we decided to launch the transaction in September 9th and taking advantage of the lowest cost in interest rates in more than a year. So that was in terms of timing. The final results were very satisfactory. Look, these are on the right-hand side are our yield curve, and you see the blue is the yield curve at the beginning of the year. The gray line is the yield curve in the toughest point of the pandemic. You see how it very steepened. And the red is the latest point of the yield curve. And you see not only that the yield curve shifted downwards, but that it also elongated and to the 30-year sector. In terms of size, we were able to issue 4.8 trillion pesos. In the equivalent of dollars for this is something like $1.3 billion, $1.3 billion. This is more than 3 times the maximum amount that we can actually issue in a single auction, as I mentioned at the beginning. We were able to price the bond at 7.25. So if you remember this range, and it's important to say that this range does not include any premium on liquidity or any, let's say, concession. This is just what the models will tell you. And we feel comfortable that we were able to price on the upper part of the range, which would indicate that the concession that we gave to the market based on the market prices of that day was very minimal, 2 or 3 basis points. The bid to cover was almost 2 times, and it may seem low to you, but it's the only reason it is 2 is because we had a trade-off to decide between having a higher bid to cover and having a larger size at an interest rate that we consider comfortable, and we decided to opt for the second one. The allocation of these, and this is another advantage of the syndication, is that you have a lot of discretion on how you allocate the demand. As you see, it's high quality demand. Virtually 80% of the holders of these new bonds are real money fund managers and local and international pension funds and insurance companies, which tells you a lot about the stability of prices and the quality of the holders. And we reach an interesting split between domestic and external holders of 70-30, with 70% of the demand and allocations for these bonds were placed internationally for foreign investors. One of the final points that I wanted to say is that look at the exchange rate. Colombia, maybe for some of you that don't know, we have a long tradition of a free floating exchange rate regime. We don't target levels, we don't intervene in the market. And you will see that the launch of the transaction didn't actually create any distortions in the market, in the FX market. And why is that? And this is a point that we're going to discuss in the final slide, and is the fact that one of the roles that we assigned to the book runners was the fact that they had to make this transition. They had to put a lot of their balance sheet in local currency so that the inflows of dollars from foreigners didn't create any distortions in the market with the transaction. And we can talk more about this. So finally, there are a lot of lessons learned. It was not perfect. There are a lot of things that we can improve. We consider that it was a successful experience, but I just summarized a couple of the top lessons learned that came to my mind this week when I was preparing the presentation. One, have a very strong billing and delivery agent within your book runners that protects and smooths the process of these syndications in the FX market. Two, get a lot of clarity on the laws applicable to this exercise for foreigners. We are not Euroclearable in our bonds, and we don't want to be. And the Colombian peso is a tradable currency, but it's not deliverable. So there was, for example, in the United States, only a qualified sector of investors that were able to invest in this bond because it was under Colombian law. And for example, we targeted those investors that are Reg S. So you had to have sort of two requirements to be able to invest in this bond. First, to have a local custody, and two, to be eligible under US law, in this case under Reg S, to invest in this bond. So we have to explain this very carefully to all of our investors. This was less of an issue in Europe and Asia and the Middle East, but it's something that is very important for you to take into account. The third is that, as I mentioned, settlement and all the infrastructure has to be in accordance with international standards. If you ask me, the mantra should be communication, communication, communication. The whole year from September of 2019 to September of 2020, when we launched the transaction, we were on a monthly, bi-monthly basis communicating, outreaching, road showing with investors, with regulators, with pension funds, with different pockets of investors, because to be honest, nobody's going to sell your bond, nobody's going to promote your bond. The banks are going to do part of the job, but you have to communicate to them the viability of this instrument and how it's important for their investment goals. Fifth, we targeted from the beginning a size that was immediately included in the international indexes for local currency bonds. And that was part of the rationale why we decided to issue $1.3 billion, because once you issue the $1 billion, we were included immediately in the JP Morgan index and in the 2 Barclay index for local currency. And that we have the suspicion and the intuition that determine that split between international and domestic investors of 70-30. And finally, something that is very, very good for debt managers is that this format of syndication in a non-euro clearable country allows you to ensure a very high quality of investors. Because the investors that participated in this exercise were already in Colombia. They were already invested in Colombian local currency bonds. They already had a local custody. So their orders, their pricing, their sizes were very sticky. And that helped us a lot in the price discovery process. For example, and we love also hedge funds. You know, you need diversity in the holders. But hedge funds don't have a local custody in Colombia because, as you know, many of their exposure in emerging markets is synthetic. So just by the way this is structured, we were able to attract high quality investors. So apologies if I took too much of the time, but we feel very passionate about this and we just wanted to exchange the most that we can do. So I pass the floor back to our discussant and our moderator. And thank you very much for your attention.
Thank you very much, Cesar, for this excellent presentation. And we do have already some questions, which we will take after Sebastian's intervention.
Thank you very much, Sebastian. And actually, I want to acknowledge and thank you personally because you were a co-author with our long friend Antonio Elandia, who is also in the call of the technical note and the dialogues, and you came to Colombia, so you are co-authors of the transaction. Thank you very much. So I try to take notes of the main questions, and I'll try to address them, and let me know if there is any follow-up. The first one is relatively easy. Yes, always the strategy was to have a launch of the bond that was large enough to be attractive for institutional investors domestically and abroad. And immediately after, the bond will be retapped every other week on the weekly auctions of the Colombian bonds. So actually, I just got the numbers. So we launched the bond for let's put it in dollars to be easier for people to compare. But we issue the equivalent of $1.2 billion, $1.3 billion. And since then, so it has been September, October, in these 2 months of auctions, we have retapped the bond for 25% of its initial issuance. So through auctions, we have allocated an additional $300 million. And actually, in the auctions, in the weekly auctions, this bond is one of the 3 that we have been putting in the weekly auctions, and it has been the favorite since we launched the transaction. So, and I think that was key, especially with the foreign investors, because they were saying, we don't want to invest in an instrument that is not going to be liquid, that we cannot get in and out, that it actually doesn't help to our portfolio holders. And we made the commitment from the very beginning. You're going to have a sizable launch, and you're going to have trading in the secondary, and you're going to have also activity in the primary market through its inclusion in the auctions. Did we take a look at the hybrid models in Holland?
I apologize, but before you move to the next question, because there was a similar question from the participants on retapping the bond, So the follow-up question was about whether you set some quoting obligation for the primary dealers when you were reopening through auctions.
Yes, absolutely. So this bond, once it gets included in the auction system and it reaches a particular threshold, it has to comply with all the quoting obligations of the other bonds that are outstanding in Colombia. So I don't want to bog you down with a lot of details, but we basically have a universe of something like 20 bonds. And by regulation, they are obliged to quote at least, let's say, half of those bonds by a particular amount in the primary market and then quotes in the secondary market. So this bond has no difference with those other requirements. But it's important, it's very important that once it's reached the threshold, and in this case, it's reached the threshold immediately, in a common launch of a new bond through auctions, the bond takes like 2 months to get to that threshold. So yes, hybrids. We look at the experience of Holland and Mexico. It has advantages and disadvantages. I think the main advantage is that it's free. At the end of the day, when you give a mandate to banks and you have your book runners, you have to pay your fees. In our case, in this case, we felt good by paying those fees because the quality of service and the launch of the transaction was good enough for everybody. It was a win-win for them. It was a win for us. So I think that moving ahead, you should have flexibility as a debt manager. You should be able to do probably a hybrid exercise like Mexico does it very, very often. They actually, my understanding, Sebastian, is that every new bond that they launch, they do it through the hybrid mechanism. So that is good. And you know, we don't discount that we move towards there to optimize costs. But you can also have the flexibility to use this market mechanism because it aligns the incentives of everybody. The banks are actually working for you, for building the book, but the problem is that you need the infrastructure to do that, and Sebastian was making that point. And to be quite honest, this was very new for us. And we have to develop a lot of regulations. We have to develop a lot of infrastructure improvements. And we didn't feel that we were ready to undertake it on our own at the beginning. We decided, let's do it first with a division of roles. The banks do this part, the regulators do this part, and the issuer does this part. But I think that those are possibilities that we can actually assess in the future. In part because I think that thinking about the financing strategy for the coming years, I think syndications are going to be part of the toolkit. So we probably don't have only auctions, but we can alternate auctions with potential syndications through the year so that we are better suited to finance our program. Did you assess global formats? Yes. I think that this is a function of the level of development of your market. Colombia started the internationalization of its local currency market in 2014. The level of participation of foreigners in the domestic market was 4% of the outstanding. From 2014 to 2018, that number grew to 25%. 25%. So when you look at our global bonds, we still have 3 global copy bonds that we issue. One that is maturing in actually next year, 2021, one that is maturing in 2023, and one that is maturing in 2027. So yes, if you don't have a very well developed or during an earlier process of development or deepening of your local market, I think global formats are a very good option to undertake these exercises. And we did that. I didn't mention in the presentation. So in that process between 2014 to 2018, yes, we tapped at least 3 bonds. We issued 3 bonds in global format. But when we had consolidated this investor base and this level of development in the local market, we felt comfortable enough to be able to do it in Colombian law, in local currency, because actually when you issue the global bond, you also settle in dollars. And despite the fact that you have sent the risk to the investor, it also creates an issue of conversion there. So an important driver of this decision is also mitigate regulatory risk and mitigate FS risk. The more that you can issue in your own currency at long term, the better. But I understand, and I think it's fair game to go by steps. First, you have to issue in dollars, foreign law, then you can issue in global copy. And especially because if you don't have a big enough and a proven system of local custody, then investors are going to be very wary. We were able to do this because investors have their local custodies since 2014. It has worked well. They feel comfortable with the way it works, with taxation issues, with everything. And that's why we took this route. But a note of hope for their manager is that you don't need to be Euroclearable to do this. It's more difficult to do it. It's more difficult. We had to do more steps than our colleagues in other places, but it is possible to do it too. Someone asked me about the compression of rates in the secondary market. I think it's a great question. I didn't want to answer, but I have to. I think that there are a lot of lessons learned. This could not be possible. This is not a tactical exercise. This cannot be possible if you don't have a solid macroeconomic and fiscal story to tell investors. It's very difficult to ask an investor to put money on a 30-year instrument, even if the rate is attractive, when you haven't solved key issues on fiscal terms, when you have issues on macroeconomic imbalances. We have our challenges. And as many of my sovereign debt managers, colleagues that are here, we are in negative outlook by rating agencies. But the first thing that you have to have is a consistent, realistic, macro fiscal story to tell investors. And that doesn't necessarily depend on the debt manager. It also has to do with the Minister of Finance and even the President of the Republic that tells investors we're maintaining macroeconomic stability, we're maintaining our fiscal responsibility, even within this process of the pandemic. So that is the anchor. The anchor is a credible, and it doesn't have to be pretty, but it has to be credible, consistent, and with a clear exit of this emergency. Then you have to be very active in monitoring markets. When I show you that interest rate of the 10-year bond, we had like a barometer of boxes that we needed to check to issue the bond. So first one, as you saw, we waited for the Fed cycle to finish, and right when the Fed cycle finished, our central bank started its easing cycle, and that helped the interest rate. So that was a very important part of our exercise. Second, we waited until the dollar depreciated, because for the last year, the DXY index was nearing 100. In the first 6 months, since the pandemic to now, the DXY index went to 90. So there was a depreciation of the dollar that helped to build support for emerging market currencies. And that is very important, especially for a foreign investor. So that was another check that we had. And the sort of the cherry on top was that right in the middle of this process, in August, Barclays came with an announcement that they said that they were going to include Colombia in their indexes for local currency bonds internationally. And that, depending on the analysts and on the assumptions, meant that there were a pool of something between $2 and $5 billion of inflows into the Colombian market through time. So when we put all these three together, so we have a realistic macro story to tell. We look at the FX market. We have the rates where we want it. And we got this positive message that Barclays were going to include Romania, Peru, and Colombia in the indexes. We launched the transaction to do that. Now, someone tell me, what would you do different? That was also a question that I read. And I have to be very honest, we were positively surprised by the size of the book, by the quality of the book. So we probably will have to refine even more our price discovery process, okay? But it's easy to tell you with the benefit of hindsight, but that is more determined with the level of demand. And also, I think that you need to do a very thorough study with the lawyers, with your international lawyers, because the laws and the regulations, especially in the United States, are very strict. And we have a few exchanges with investors in which they said, this looks okay, but I'm still a little bit wary because it's new. And there were even investors that probably couldn't participate in the deal because their compliance and legal departments were still in the process of digesting this type of format. So I would say those are two things that I would do differently. Work even harder on that legal analysis, and you know, be very millimetric in the price discovery process, depending on your investor base. Are probably lessons learned that we had. Maybe I left any other question. Okay. So were you afraid that because you're not Euroclearable, you were not going to get enough investors? That's when your communication and roadshows strategy come in. I probably talked to the top 50 investors internationally in Colombian tests and the top 20 investors locally in a direct dialogue with them about this possibility. And we got enough level of confidence that we had a critical mass to issue the bond. Did it mean that we were going to capture the new investor in New Zealand? No. If he didn't have the custody in place, he was not going to be able to participate. But we decided to build that critical mass and launch the transaction. Now, there is an additional benefit of this, and it's the fact that when we finish the transaction, we experience the highest growth level of new investors opening an account in Colombia. Because since the transaction was successful in terms of volumes, in terms of allocations, Fund A in Northern Europe, Fund B in the Middle East, Fund C in the United States, said, okay, we want to open a custody account in Colombia because I think that this is a trend that is probably going to continue, and I want to participate in that trend. So that was a collateral benefit that we didn't anticipate, but that we're tracking in the data today, and it is encouraging. Those were the questions that I had in my notebook, but I'm happy to answer any others.
Thank you very much, Cesar. So yeah, if you have time, maybe there are two more questions that came through the chat window. One of them is linked to your latest point on the non-residents opening custodian account. So the question is about how large demand did you see from the domestic investors, and was it intentional to allocate such large share to non-residents, 70%? So that's one question, and there's one more that I will ask after you respond.
Yeah, if I understand well, the question is what was sort of the split. As I mentioned, the split of the book and pretty much the split of the final allocation, it was between 2/3, 1/3, and 70% and 30%. The largest share was international. And it was very, very diverse. Really, it was not only, we all debt managers have, a top 10 largest investors, but believe me, it was more than that. And locally, you need to work very hard with locals, because this format is second nature for every fund manager in New York, in London, in Luxembourg, or anything. That's the way they buy bonds everywhere else. But we had to do a lot of teaching and socialization with the local investors, because what is second nature for them is the Dutch auction. And we did half of the job in the sense that we explained the thing, but also we included within the mandate for the book runners, the obligation to have teaching sessions with local investors. And we were very impressed that one of those teaching sessions with domestic investors, there were something like 150 participants, because there was true interest and curiosity on how this worked. Book building through syndications were two things that were the first time that were done in Colombia in this format. Actually, in the domestic market, we have a practice of book building, but it's very different to the international standard of New York or the jurisdictions. So communication, as I said, believe me, the bond doesn't sell itself. You have to push it. And it's the responsibility of the debt manager team to promote it and to show the benefits and also the risks to the domestic and international investors. And we think that was very healthy. The ticket size was also very, very constructive. People, I mean, it's no secret, in a context of very flat curves, very low interest rates, if you're comfortable with the FX risk, a rate of 7.25% for 30 years is very attractive if you have the right macroeconomic message to sell.
No, this is impressive indeed. So one last question, going forward. So given this successful experience, do you have any plans to use this syndication method for example, issuing long-term inflation-linked bonds, for example, something that Sebastian mentioned being done in the OECD area?
Yeah, thank you. The short answer is yes, in the sense that, look, we changed our regulations. So every year in December, we issue a resolution, a circular, that updates our framework for local issuance in debt markets. So the first thing that we did is that over there in that circular, it says you can issue bonds locally through A, Dutch auctions, B, private placements. Well, now we included C, syndications and similar methods for X or Y. That's number one. So it's institutionalized now as another alternative for financing. Two, I think Sebastian made the point very clear. This was born in Europe because they needed to issue bigger sizes and fund bigger financing needs. My personal opinion is that those who think that financing needs increase in 2020 and they are going to dramatically decrease in 2021, I think you have to think that twice. What I'm seeing in Colombia and with all my fellow debt managers is that financing needs are going to continue at a high level for the coming months. So this instrument is actually a very interesting alternative. It's not the silver bullet to your problems, but believe me, it's another alternative that you have open. To the point that as we are thinking now our financing program for 2021, we will probably look very similar to what Portugal is doing. In Portugal, they said, well, here are my options, and here are my 2 or 3 syndications during the year. And it's very important because one of the advantages, someone was asking me about auctions versus syndications. The problem with auctions is not the price discovery, it's sort of the same, supply and demand. The problem is the timing and the rigidity. We open and close an auction in 30 minutes. That's it. And we have to announce it a year before. So no matter what happens, on November 20th, we're going to have an auction of these instruments and that. With the syndication, you can be more opportunistic because you can issue the bond the same way you issue your global bonds. You check all those boxes that you have. Oh, I like the rates, I like the FX, I like the appetite, and you go to the market at 7 a.m. or 8 a.m. in Bloomberg and you launch your bond. Or you don't launch it, even if the demand is not there. So yes, the question is, we are thinking about the benefits of this and how to integrate it in our debt management strategy and issuance program for the months to come.
Perfect. Thank you so much, Cesar. Thank you so much, Sebastian. We slightly went over, but I think it was very interesting and a fascinating discussion. So yeah, again, I would like to thank you for taking time away from your very busy schedule. And as I said, we will be posting this in our website. And if there are more questions, I will channel them to you, Cesar. I'm sure all the participants benefited greatly from your experience.
Chidem,
Yes.
may I
Yes.
just say one thing for those interested? The World Bank published a few years ago a background note on domestic syndications under the GEMLOC initiative. And it's still pretty much up to date, and it can provide you with a lot of information. So if you are interested, please reach out to Chidem or to me, or we can put the link. It's on the external website as well for your information. Thanks.
Perfect. And I see that Ulrich Zacao also is connected. He's the country director Hi, Ulrich. Good to see you.
Hi, Chidem. Felicitaciones, Cesar.
Ulrich, no, thank you very much. You're also a strong partner. Without you and the relationship that we have with the bank, this wouldn't be possible. It's a very respectful. I have to confess that we don't always agree on everything, but that's probably the beauty of it in having these discussions, the commitment of the technical team, the open avenue that the World Bank at the highest level of management, Ulrich and everybody else has been impressive with Colombia. And at the end of the day, as I mentioned, this is a bet on the development of the local market more than the funding exercise, and those benefits will trickle down to. And I didn't mention that in my presentation, but we are seeing more local development banks coming to market, more pension funds, domestic banks, actually extending also their yield curves. And I think that is very useful to avoid any crowding out from the part of the government and to keep the credit channel alive. So Ulrich, through you, all those missions and technical help has been channelized, and I cannot be more grateful. And my team, which is also on the call, wanna thank you because this has been a success in part thanks to the collaboration that we have with you and all the areas of the bank.
Thank you for the opportunity, Cesar, and thank you also for speaking today. I think it's really helpful to bring this experience to others. All the success, including some of the lessons you drew, I think are very interesting. We'll continue to be there for you.
Thank you very much, and my regards to, I see familiar names in the audience, and technical staff, all friends and fellow debt managers. You know how to reach me, and if I can be of help to tell you the good, the bad, I'll be more than happy to do it. I have to depart to another meeting, but it was a great pleasure to talk to you, and looking forward to other opportunities to do this. Thank you.
Wonderful. Thank you, everyone. Thank you. Bye.
Thank you. Bye.